Okay, now that you probably have the Forex Currency Index downloaded and installed on your computer, it's time for me to actually explain you how to read it and how to use it, right? Well, as you probably know, the Forex Currency Index reads underlying market strength and weakness for any particular currency on your favorite time frame of choice, on the time frame that you call the setup chart. Okay, so if you are, for example, a 4 hours time frame trader, you would mostly be paying attention to this box on the Forex Currency Index. If you're a scalper, you would be paying attention to these readings here on the left hand on my screen. If you're a very long-term trader, this is probably the readings you should be paying attention to. Okay, now the Forex Currency Index goes from plus 10 points of strength, which means absolute strength, to minus 10 points of weakness, which means absolute weakness. Quite frankly, I've never seen the Forex Currency Index printing either a plus 10 or a minus 10 points for any particular currency. If you ever see those type of extreme readings on the Forex Currency Index, it means that the market conditions for that particular day are absolutely not normal. For example, on September the 11th, 2001, when we saw the terrorist attacks on New York and Washington, I am pretty sure the Forex Currency Index was printing a minus 10 points of weakness for the American dollar. Actually, if you pull out your Forex chart for the 11th of September and also the following 1 or 2 days, the market was actually slaughtering, was punishing the American dollar like there was no tomorrow. All right. Whenever you see that type of extreme market conditions, maybe you may see a plus 10 or a minus 10 readings on the Forex Currency Index. Other than that, what you will see are readings anything above plus 5 points or anything below minus 5 points is already quite a strong readings, either to the upside or to the downside. So if you pull out your Forex Currency Index indicator and on your favorite time frame, let's assume you're a mid-term trader, your favorite time frame is the 4 hours time frame. This is the time frame you call or you designate as your setup chart. Well, anything above or anything between plus 4 and minus 4, it means that the market is pretty much at equilibrium. If all the currencies, such as for example right now on the 1 hour time frame, we see that all the different currencies are between plus 3 and minus 3. They are all flapping about the zero line, right? Well, when this type of market condition happens, it means that the market is in equilibrium as a whole, and therefore you cannot really make money. When the market is at equilibrium, it's very difficult to make money because, well, quite frankly, just because the market is at equilibrium. Just as in the swing trading module, the first module of the course, I was stating that it's very difficult to make money when the price is entrapped between two horizontal boundaries, between two horizontal lines. It's really difficult to make money right there in that portion of the chart because there is no clear market bias, and you should be waiting for price to actually break out the congestion area and begins moving. Well, it begins moving in any given direction before entering a trade. Well, pretty much the same thing happens when the Forex market, the Forex Currency Index indicator is printing all the different currencies between the plus 4 and the minus 4 levels, flapping about the zero line. When all the currencies are at equilibrium, you cannot make money. I must repeat this very slowly because it really is crucial, guys. You really need to understand that in order to make money in the Forex market, you need to exploit a divergence. Okay, you need to exploit one particular currency that it's gaining ground against some other currency, some other particular currency. When all of them are in equilibrium, when all of them are pretty much moving sideways and none of them is showing any particular market strength or weakness, I am telling you, the best trading decision you can take. Imagine you're a 1 hour time frame trader, you pull out your Forex currency index and you see this type of readings on your indicator, all of them either below the +4 points and above the -4 points. The best trading decision you can take is simply to call it a day and not search for any trading opportunity as long as this equilibrium remains in place, as long as this status quo does not change, as long as no currency breaks above the +4 points of strength or -4 points of weakness. As I was saying before, your best trading decision is to simply not search for any trading opportunity, because the market that precise day is just an equilibrium and you cannot make money when the market is simply moving sideways and there are you have no edge over the market. In order to have an edge over the market, you must trade a currency that's actually moving, okay, actually pushing towards one given direction, either to the upside or to the downside. It doesn't really matter, but that particular currency needs to be moving. All right, if it's stagnant, if it's moving sideways, well, you're playing a fool's game. All right, you're not gonna make money there. You're just gonna trade in a market that doesn't want to move. And if the market doesn't want to move, you cannot move it yourself, okay? You're gonna be entering in a market that's just gonna continue moving sideways until the Forex currency index is actually printing a situation of a strength or a situation of weakness. So enough of that. As usual, I ramble away. That's why I asked my my professional caller to color code the Forex currency index. Anything above +5 or above, it's printed in green colors. Anything below -5 points, it is printed in red colors. Alright, so another thing I should be telling you about is the momentum arrow. The momentum arrow is this little part that you are seeing right now on my screen. You see how you can get either a green arrow, a red arrow, or a gray circle, right? Well, the momentum arrow basically keeps track of sudden, rapid changes in the market strength or weakness as of lately. If you're a 1 hour time frame trader, okay, and you get a momentum arrow, it means that throughout the last 1 hour, in this case the Japanese yen has gained weakness rather rapidly. Alright, if you are a scalper and you follow the 5 minutes time frame, it means that, and you get, for example, let's say a green arrow, it means that that particular currency, in this case the sterling pound, has gained strength rather rapidly throughout the last 5 minutes. And also in the weekly time frame, if you're a long-term trader and you get a red arrow, it means that the Japanese yen has lost strength rather rapidly throughout the last week. Okay? That's rather obvious, very simple to understand. Now, how exactly do you use the momentum arrow? Well, the momentum arrow is, as I was saying before, it keeps track of rapid changes in the market strength and weakness. So let's assume, I don't know, for example here, let's assume you're a scalper and you were paying attention, you were noticing the weakness on the week readings that we are getting right now on the sterling pound. In fact, we are getting a -5 points of weakness on the sterling pound, which is quite a lot. Okay, it's quite weak, as I was saying before. Anything below -4, it means that, well, you know, that particular currency is rather weak across the board. Now, on the other hand, we see a green arrow. Okay, it means that throughout the last 5 minutes, even though as a whole the sterling pound from a scalper's point of view is still rather weak, and rather weak across the board if compared to the other currencies, it's gaining back a little bit of strength as of lately. All right, so probably if we looked at the Forex currency index 5 minutes ago, the sterling pound was printing a -6 or even -7 points of weakness, and now it's retracing back up. It's gaining ground against all the other currencies, at least throughout the last 5 minutes. Right? It's still very weak. I mean, don't kid yourself. It's still very weak, and it's not time to search for long opportunities on any sterling pound cross. But nonetheless, if you were searching for short opportunities, this may actually ring a bell. Okay, it may actually make you raise your eyebrow and say, okay, maybe it's not the right time yet to short the sterling pound from an scalper's point of view. All right, that's how you use the momentum arrow. Now, out of the Forex currency index readings and the momentum arrow, obviously the most important one is still the Forex currency index. Okay. However, it's usually a good idea to use both of them when they combine together, when they agree in the same direction. For example, imagine you are a 4-hour time frame trader. You see the New Zealand dollar is printing a +6 points of strength, and that means that it's rather strong across the board. Today, the New Zealand dollar is the strongest currency actually of all the other currency pairs in the of all the other currencies in the 4-hour time frame. And moreover, it's not only is strong, but it's also getting stronger and stronger. As of lately, throughout the last 4 hours, the New Zealand dollar is showing also a green momentum arrow. So probably 4 hours ago, it was printing a +5 points of strength. Now it's gone up to +6 points of strength, and that means that you have the green lights. Okay, you have not only you are trading or you are looking to buy a strong currency, but moreover you are looking to buy a currency that's strong and that's moreover gaining strength across the board as of lately. That's good. That's good for you. You want to long the New Zealand dollar. Moreover, we can look into the Japanese yen. That's actually printing a -5 points of weakness, and moreover it's getting weaker and weaker. Take a look at that red momentum arrow there. So not only you want to sell the Japanese yen right now because it's weak, but also moreover, and that's strengthening your or making that trading opportunity even a higher quality of a trading signal, is actually getting weaker and weaker as of lately. All right, throughout the last 4 hours. So looking into the 4 hours time frame, as you can see, the New Zealand dollar is the strongest currency today on that particular time frame. That's the currency you want to buy, and now there are two currencies you want to sell. Then the American dollar at -5 points of weakness, and the Japanese yen at also -5 points of weakness. So you have two options: to search for long opportunities on the New Zealand dollar against the American dollar, or to search for long entries on the New Zealand dollar against the Japanese, it's difficult to draw with your mouse, against the Japanese yen. Okay, those are the two options as per the Forex currency index. Now, we've already seen how the New Zealand dollar is getting stronger and stronger, so buying the New Zealand dollar is a good idea today. Okay, not only is it strong, but it's also getting stronger, so it's a good idea. Now, which one should you buy the New Zealand dollar against? The American dollar or the Japanese yen? Well, both of them are equally weak at -5 points of weakness. However, the Japanese yen is getting weaker. Take a look at that red arrow there. So it's gaining weakness across the board at a faster pace than the American dollar, and therefore, out of these two options, you should be searching, or it's a better trading opportunity to search for short entries on the New Zealand dollar against the Japanese yen than it is to search for short entries on the New Zealand dollar against the American dollar. On the other hand, if you get a gray circle, it simply means that the status quo remains unchanged. The American dollar was at minus 5 points of weakness 4 hours ago, and moreover, it's still printing a minus 5 points of weakness right now. So it was weak, and it's still equally weak right now. The Japanese yen, in the other hand, it was weak, and it's even weaker right now. So out of the two, if I was to choose one of these two currencies to sell, I would certainly like to sell the Japanese yen over the American dollar. That's how you can profit, that's how you can trade the Forex currency index, and that's how you can trade the momentum arrow. You want to make sure that both of them combine in the same direction in order to, well, strengthen your trading signal and to make that particular trading opportunity a much higher quality trading signal altogether. All right.